G'day there, Ray Cochran here. In this week's video, we're going to be talking about Sydney house prices in 2022. So obviously the last 12 months and 18 months has been crazy. In the last 12 months, Sydney house prices have gone up by something wild like 25 to 30%. And a lot of people are asking, well, what's going to happen in 2022? Is it going to go up? Is it going to go sideways? Is it going to go down? And a lot of people are not sure whether they should buy now or should they wait and buy later. And as someone that's looking to buy a family home in 2022, this is something that's been on my mind as well. So in this video, I'm going to go over all the different stats and a lot of different expert opinions, both individuals and from the big banks and research houses. And all of it is really just trying to find out, what is everybody saying about where they think property prices will go in 2022. And while prices have gotten crazy, wage growth has not increased in line with house prices. So about 20 years ago, it used to take about 5 times the typical annual salary to buy the median house in Sydney. And now that is about 14 times the typical annual salary. So you can see that if you do feel like it seems harder to get in the market now, you are not mistaken. And wage growth has been relatively flat. And I'll put a graph on screen to show that the property prices have basically gone like this, and wage growth has gone like that. So it's definitely harder at the moment. And a lot of people are really unsure about how to get into the market, what they should do. Should they just rent? I've personally been rent vesting the last few years. So I've got properties in regional Victoria and regional Queensland. And I rent where I live. And for me, I've been thinking about, do I keep doing that, which I still think is a good strategy, or do I look at buying a family home? And this is not just for financial reasons, but more so for peace of mind, owning the home and all those sort of non-financial things that would be a factor. And if you find this video useful, please give it a like. It does help it reach more people. And if you want to subscribe, I do weekly videos on personal finance. So auction clearance rates are a one factor we can look at in terms of how hot the market is and how competitive the market is. And recently the market has been obviously very, very competitive. But one interesting thing is that auction clearance rates have pretty much been consistently dropping over the last 9 to 10 weeks. They were peaking at around, in the 80s, and now they're down to, very recently it was about 67%. So it's continuing to drop, and a lot of people are withdrawing their homes from auction or selling their homes prior to auction, which for people trying to get into the market is great news. So I'm going to go through a few different factors that can affect prices. And one of them is the amount of houses obviously for sale. And in September of this year, there was actually a record low number of houses for sale. So less houses for sale, tons of buyers out there, naturally prices are going to start going up. There has been a bit of an increase. We're in December now, and there has been a bit of an increase of people listing their homes. A lot of people want to sell their house before Christmas and move into a new place around the same time. But there's been a few more listings. Whether that keeps up and whether that continues to happen in the new year remains to be seen. So recently APRA has made some changes, which has sort of tightened lending criteria. So people that used to be able to borrow this much they can borrow a little bit less. It's been about 5%. A lot of people have said it kind of works out to be. And if they make further moves in 2022 and they tighten things even further, it means that will typically cool the market. So a lot of price predictions are factoring in whether APRA takes action or whether they don't, and whether inflation ends up being as bad as they expect or not. So another factor is low interest rates. This has been an ongoing thing. If we continue to have record low interest rates, that will not dampen prices. But what we're starting to see as we're in December now, as we're starting to see a little bit of an increase in a number of rates from many of the lenders and banks. And I've noticed this myself. I had a rate, and I did not use the rate lock facility, and the rate went up, not by much, but it did go up a little bit over a couple of months. So if we see rates continue to increase, that will definitely put a damper on prices. The next factor is population growth. So in 2020, obviously that stagnated a little bit, but ongoing, we kind of expect that there's going to be, as borders have been reopened, that we have a number of people coming back into the country. There has been a number of skilled migrants that are from Australia that have left, and they're typically highly paid, and they're coming back. And with all the disruption around the C word, I won't mention it, in this video, but with all that disruption, a lot of them are coming back and actually want to sort of place roots in Australia, and they've got budgets to match. So that will definitely affect prices in 2022. By how much, that sort of remains to be seen. We also still have cashed up buyers, people that have not spent a lot of money in 2020 and 2021. They've got the budget. They are working. Many people are working from home a lot more. They're really thinking about, do I really need to be in the city? A lot of people, the Great Resignation, a lot of people are leaving their jobs and looking for stuff with greater work flexibility, potentially not being in the office as much, moving to more regional areas. So that definitely will be a factor. One thing that has always kept property prices high is a lot of the tax policy. So in Australia, tax policy is really skewed towards property ownership versus people that do not own property. And whether it's stuff like negative gearing, capital gains tax discounts, there's a whole bunch of, you get property investment, you get a number of deductions that you can get. So owning property is very, very favorable from a tax perspective. And if that doesn't change, which it probably won't in 2022, that is one factor that will continue to make sure that prices don't, totally drop. Another factor is housing supply. So even though in many areas there seems to be lots and lots of apartments being built, there has been big fluctuations in how much new houses are being created, both houses and apartments. And in some areas it's like crazy, but in many areas there's not a lot of construction that is happening. Many people in local communities, they don't like big, huge towers in their area. So often these apartment blocks might only be 3-4 stories instead of 5, 10, 15 stories. And that makes a lot of sense. I probably wouldn't want a huge high rise in my area as well. But stuff like that means that as a number of houses that need to come onto the market or need to be constructed don't end up happening as much as it probably should, and that just only affects prices even more. So what are all the experts saying? So CBA actually in around March-ish 2020 predicted that property prices would drop by 32%, and worst case, and by best case, they would drop by 11%. Now, the prices ended up going up by 5% actually that year. So with a lot of these predictions, take them with a grain of salt, but I thought I'd just share what a few different major players are saying, and you can make your own decision from there. Overall, most experts are predicting like 5, 6, 7% increase in 2022, and so it's still a decent increase, to be honest, but it's dramatically slower than what we've seen in 2021. AMP Capital chief economist Shane Oliver, they're predicting, him and his team are kind of predicting around a 5-ish% increase in prices in Sydney, and he expects interest rates to really start rising by the end of next year. CoreLogic, on the other hand, is expecting the RBA not to be too aggressive with interest rate rises. They kind of expect that they don't really want to be ramping it up too fast. If they do ramp it up too fast, it's going to cause a lot of people mortgage stress. So they're very, very careful not to do it. They probably will want to do it, but they won't want to do it too fast. Otherwise, it will cause lots of problems for a lot of people. Household debt is at record highs in Australia. So, even very, very minor changes to interest rates can make a massive impact to people's budget and their ability to pay the mortgage. So it's a very, very precarious thing that they have to manage. Finder Research has actually predicted around an 8% increase in prices in 2022, which would add about $102,000 to the median price. Graham Cook, the head of consumer research at Finder, has said that it's actually been driven by owner-occupiers and investors. So a lot of people think investors are always the ones sort of driving prices up, and people getting 6, 7, 8 properties are driving the prices up. But there's many, many owner-occupiers that are driving up prices at the moment as well. SQM Research's boom and bust report thinks that property prices in Sydney will peak by around June 2022. And then they think that in the second half of the year, prices will contract by around 2 to 3%. And in terms of Commonwealth Bank and Westpac, they're both expecting property prices in 2022 to go up by around 7% overall. And if you're wondering, a lot of the price predictions for next year are sort of between the 5, 6, 7% mark. If you were wondering what a, say, 6% increase in property prices would do if you're looking for a house, I'm just gonna provide a few examples up on the screen now. If you are looking to buy a $500K house, $1 million house, a $1.5 million house, or a $2 million house, and what would a 6% increase in prices look like, and how much more would you have to pay? So in terms of what I'm planning to do, if everyone gives a crap, which I don't think they do, but for me, I've been looking at as I said, I've been rent investing and investing in properties elsewhere, and I still think that's a fantastic strategy, and I've got a link to that video. I'll put it in the description below if you want to check that out. But for me and my wife, we've got a kind of a sort of growing family, and we're considering, we are moving to a point where we would like more space, and ideally 4 bedrooms. So we would have room for potentially 2. Well, I've got one son now, but if we did choose to have a second kid, and have our room and then a dedicated office. I've been looking lately at a whole bunch of sort of rental properties, whether it's houses or townhouses or even large apartments. There's not many 4-bedroom apartments, obviously. And after looking, there's not a lot of great options in the areas that we want to live. So some of them are really, really expensive, or they're not as expensive and they're kind of crap. We've kind of realized that, many of these places, if you want to rent like an entry-level house in some of these areas, you're going to be paying $1,000 a week, $1,100 a week, $1,200 a week and upwards. And for us, if we're going to spend, say, $5,000, maybe $6,000 a month on rent, then we might as well spend 7 or 7.5 and just get a mortgage instead. Now, that's not going to be fine for a lot of people. That might not be suiting them, but for our particular situation in the suburbs that we want to live in and all that sort of criteria, for us, we'd probably rather just buy a place and own it. And for me personally, I'm okay if prices do go down a little bit. If you look at the long-term trend of Sydney house prices, it does go up over long term, over the last 30 plus years. It has been going up and up and up. That's not to say that if I buy now that they won't go, that they will keep going up. There's been many lulls in the Sydney house price market where it's gone up, and then it's gone sideways for 5-6 years. That's definitely something to keep in mind. For me, I'm leaning more towards I'm okay taking that risk. That may very well play out, but for me, I'd almost rather just getting a place, having a bit more of a permanent place. I've been renting since forever, basically, and we've moved around a lot to different areas of Sydney, east, north, west, central parts of Sydney. So we've been all over Sydney and rented everywhere pretty much, and it would be nice to have a bit more of a stable and consistent place that we live, and we can sort of put down roots and all that sort of jazz. So financially, it may not be the dollar for dollar best thing for us to do, but I don't think it's going to be a bad decision. And I also like a lot of the non-financial factors, I guess, of buying a permanent house and all that sort of thing. So that's sort of what's on my mind. I could be totally wrong. I could buy something and it goes down in value, but yeah, I'm kind of okay with that. And yeah, so I thought I'd just share my sort of thoughts on that. So I hope you found that useful. Obviously, it's going to be probably another weird year after the last 2 weird years that we've had in 2020 and 2021. But either way, all I know is I'm going to work a lot, save a lot, and hopefully continue putting that into property and ETFs and that sort of stuff. Would love to hear what your thoughts are in terms of where you think house prices are going to go. Is there anything that I've missed? Is there anything I've maybe not considered? I would love to hear from you. And yeah, I'll see you in the next video.